Before we start the video, I want you to subscribe to the best Telegram channel at the first link in the description, where we show our earnings on cryptocurrencies, and not only, our capital that we manage is more than $3 million. Here you will find only the most useful. Thanks for subscribing. Also in the description is a links to verified exchangers, when you register on which, you get a welcome bonus from me. Let's get to the video. Friends, USA regulators are on the warpath against cryptocurrencies and the first heads are already flying. But meanwhile, the market is preparing for the next key date, and so far the initiative is with the bears. Let's break it down. The Securities and Exchange Commission, aka Security for short, has prioritized cryptocurrencies for 2023. The official press release even quoted the current head of the agency, Harry Gensler, discussing the need to protect investors, and it would seem that nothing new happened, and we saw it all somewhere already. But just the next day came strange rumors about problems at Kraken cryptocurrency exchange, and further, with the help of Coinbase, another top USA exchange, discussion of the ban on staking cryptocurrencies began. In the evening of the same day, we learned that SEC will hold an emergency meeting, and after it received official confirmation of all the listed problems, so Kraken didn't dare to sue the regulator and went for reconciliation. They will pay a fine of $30 million and shut down cryptocurrency staking. For residents of the USA, customers from other countries will be able to continue to earn from staking through the exchange. They will simply be transferred to another division for service, and this is the rare case where you have better conditions than the citizens of the USA that Harry Gensler is so eager to protect. There is a statement from the head of the crypto exchange Coinbase, Brian Armstrong, according to which they will continue to fight for the economic freedom of their customers. This can be interpreted as a refusal to shut down staking for their customers, and they do have a lot to lose, according to this data. If we take just the top two cryptocurrency, Ethereum, Coinbase accounts for 12% of staking Ether. Kraken, by the way, accounted for just over 7%. So it's only a matter of time before SEC knocks on Coinbase stores. Therefore, investors yesterday arranged a sale of shares of the exchange. Also, $470 million in USDC stablecoin was withdrawn from the site and converted to cash. This is another story marked food. According to Bloomberg, the New York Finance Department is investigating Paxos, which, by the way, is issuing the top 3 stablecoin by capitalization. BUSD, which is also the top stablecoin on Binance. Paxos themselves said that they are doing fine and their financial services license is still valid. The problems at Kraken, and even the potential staking ban at Coinbase will not lead to the end of the cryptocurrency market, but there is still a certain amount of fear, for the reason that we see regulators starting to hit the crypto market sore spots in earnest, especially if they also take a hard look at stablecoins. They have long been called for such measures in Congress, even after the Luna and USDC stories. It's just that after the FTX collapse, apparently it was decided to temporarily shift the focus, or just the strike on the exchanges was easier to implement. Once again, current events are not the end of cryptocurrencies entirely. SEC only wants to destroy the part of the crypto market that it deems necessary to regulate and impose its rules of the game on it. If they don't slow down, then serious transformations await us, and we should prepare for them in advance. Like what? For example, there is a video from SEC, where Gary Gensler personally talks about staking and more. I published the full version of this video in our channel on Telegram. Go to it, watch it, and catch the insight. You can subscribe to Cryptanic on Telegram immediately at the link below the video. The second part of the video will focus on what is so important to happen on February 14th. And it's not about Valentine's Day. On February 14th the inflation data will be published in USA, and based on the latest statements from regulators, there could be some unpleasant surprises for the market. Let's start with Tuesday, February 7th, when in just a few hours, during the press conference of the head of the Fed, Jerome Powell, the market managed to shave both buyers and sellers. Just look at this chart, how everyone first rushed to buy when they heard the word deflation again, from the mouth of the Lord of the printing press, and then there was a wave of selling when he talked about plans to continue raising rates stronger than planned, because the labor market is still very strong, but after his speech ended, the initiative went back to the buyers who continue to believe in the Fed's ability to complete a rate hike in March and even move to a rate cut by the end of the year, although Powell himself has said several times that before 2024, it is not even worth thinking about reversing monetary policy and moving to a rate cut. It is an interesting observation that while the markets closely follow Jerome Powell, they simply ignore the President of the USA, Joe Biden. He tried to reassure everyone when he said there will be no recession in the USA in 2023 or 2024, but no one took him seriously because Biden has problems with falling political ratings, and the election is already next year, so he just couldn't say anything else. Such a cruel joke of the market. Actually, though, Biden has influence over Powell, and while he used to have a mandate to stop inflation, now the demand not to drive the economy into recession may be added here. These are inversely opposite processes, but the latest softness in the Fed's statements may have to do with just the setup from the White House so that they avoid a recession, and with it, a full-blown financial crisis, and the fact that investors are starting to call Powell a hawk again and fear a tougher monetary policy is actually a problem of excessive optimism. The Fed's rhetoric hasn't actually changed since the rate hike was lowered. There are simply too many optimists in the market who believe in an even faster move toward monetary easing. With the psychology of what's going on in the market out of the way, it's time to talk about what could happen on February 14th. If we look at the last few months, what has been forecasted and what data has actually been released, we see a slowdown in the rate of inflation. So, November and December, the actual decline was stronger than forecast. January hit the forecast exactly, but February is expected to see a decline of only 0.3%. The slower inflation falls, the more likely the Fed is to raise the rate above 5% and keep it high for the rest of the year. In summary, for the bulls to continue the recent rally in the S&P 500, which is directly reflected in Bitcoin, real inflation needs to fall more than forecasted, but an exact hit or fall below the forecast, on the contrary, will be a signal for the bears. After that, the stock market may go back to the 4,000 and 3,900 levels. For Bitcoin, that would mean a drop to around $19,000, especially with what I told you in the first part of the video about regulation. These fears are helping the bears take the initiative in the here and now. If you found this video interesting, please support it with a like and subscribe for those who are new to the channel. I will have many more interesting and useful content for you. Thanks for watching. Your Cryptanic.